Tesla stock is down 4% in this session of the 16th of December 2022, and at some point it reached a new 52-week low of $150.04. This is beneath the previous low of $153.28 by 2.11%, and it is 62.74% below the 52-week high of $402.67. So this also underlies the amount it has lost this year. It has lost about 62.74%. So given all that is going on right now, Tesla still has a healthy enterprise value equivalent to 4 times 2023 estimated revenue. But we know that high interest rates and the slowing economy is not helping consumer demand. And we have that a recent SEC filing disclosed this week indicates that Elon Musk sold around $3.6 billion of Tesla stock. Okay, Tesla's stock has obviously fallen about 62%, as I indicated earlier on. In the past year, Elon Musk has sold about $40 billion worth of shares to pay a personal liability tax on option exercises and fund his $44 billion purchase of Twitter. That acquisition has also required $13 billion of pricey leveraged buyout debt. The attendant $1 billion of annual interest expenses looks unsustainable for Twitter. One research firm, Insider Intelligence, estimates that the social media app will shed about 1/10 of its user base in the coming years. Advertisers are quite nervous with all that is going on right now. Twitter's capital structure has naturally attracted scrutiny, but the platform does not have an equity value problem, so much so as an enterprise value problem. Even if all the debt was retired, the loss in advertising revenue could crush operating profits. Elon Musk would still have to fund those losses, even if there was no interest expense. Then there's the matter of Musk's personal balance sheet. According to a proxy statement with data up to March 31st, he owed about 500 million shares of Twitter outright, along with 270 million in exercisable options. Tesla allows executives to borrow against 1/4 of the value of their stock. Elon Musk has done so against 270 million Tesla stock. Is Elon Musk facing margin calls amid the collapse in Tesla's shares, as we can see today, printing a new 52-week low? Well, according to reports recently, it suggests that he's considering replacing expensive Twitter debt with cheaper personal margin loans. But I mean, we all know that still, if he does that, the debt still hasn't gone away. So Tesla shareholders are, as it were, increasingly frustrated that their fortunes are tied to his extracurricular activities. There's no easy way out. Musk has suggested he can turn Twitter into a valuable super app. Okay, but he seems to be distracted by people trying to wind him up and all that stuff. But as I indicated earlier on, Tesla has a healthy enterprise value of 4 times 2023 estimated revenue. Okay, so he still owns about $70 billion worth of Tesla's stock, plus more in options. Okay, so selling enough of them to settle the debt for Twitter is probably available to him, and probably at a steep discount. So given all that's going on in this session, this dip we are looking at right now, let's have a look and see what the volume is. It's definitely the most active in this session, the most active of all the stocks, trading above $1, 81 million shares, almost 82 million shares and counting. So these December 16 options will expire today. So amongst other things, that hedge funds and indeed regular folks who have the means of doing so. What they are doing right now in this session, right now before the market ends, which is they're taking advantage of 0 DTE, 0 days to expire, and expire to get things done, you know. So I can imagine that, for instance, look at this. Look at this, for instance. Look at this $155 strike. Even though the stock is currently trading below that level, but what I'm suspecting is that you can see what the price is. Okay, this is a better example. You can see that this is roughly, for you to get involved with one contract, you'll just need only 10 cents. But in any case, I can imagine, I'm speculating that 0 DT traders are probably, you know, selling these if they are selling these contracts. And what it means is that when they sell it, they will be, okay, these are outside of the money, so it's not going to be a very good bet for them. But they are also doing so that maybe if you can see the open interest is not high. So what I'm saying, what I'm speculating here again, I just can't finish up what I'm trying to say, you know, is that I'm speculating that they are selling these calls. They're selling them in the hope that maybe this comes into the money, and when it comes into the money, you know, hoping that it will rebound before the market closes. And if it closes and then they will be exercised, what are they going to lose? It's only $10 per contract, and then they will have the opportunity to buy the stock at $155, also hoping that come the next trading session there will be a rebound. Okay, so but this is a better, let's see whether these you can see that as well. This is a better example here. You can see this is a better, it's in the money already. They're already doing that. 150 is already in the money. They are, amongst other things, you know, this is a speculation. I don't exactly have all the absolute insight, you know. So I mean, what are they going to lose? 170, you know, these guys can afford this $174 per contract. You know, they sell it, you know, that's what they're going to lose, but they'll be able to buy the stock at $150. They'll be exercised at $150, and then, you know, if it extends further, because this is a dip we're looking at here, so come the regular session, even the post-market session, it might rebound from these lows, and they may be able to recover something. Amongst there's so many things they will be doing as well. Okay, so I mean look at this. I mean, the volumes, the reason there's something going on here as well. Okay, see, this is also the case as well. This may also be the case. You can see that. What are they going to lose? Only $2 per contract. You can see the volume is high, open interest, okay, relatively high as well. You know, so you know, and a rebound to $160 is pretty much possible. You know, pretty much possible. You know, exercise. You know, when they exercise, they buy the stock at 160, and if it goes beyond that, then you know what they have lost practically nothing. This is actually a better example. Almost nothing lost there. $2 per contract. You know, and then the stock could, you know, zoom past that. You know. So, and in the last video, I was speculating that going by what we're looking at here, that maybe the market participants are also projecting a move towards $190. Let's have a look and see. This is the December 23rd. Okay, opening volume is 9,000. You can see the open interest as well, quite significant. So they are still holding on to that projection of 100 to 190, even though it's not the most obvious there. 190. Let's have a look again and see what's going on down there. 190. You see that? Not still quite stiff, still quite significant there. You know. So Tesla stock down 4.15%. Elon Musk doing his best to balance things out, but market shareholders of Tesla are not exactly very excited about what's going on. Just see what you make of all of these things, and let's have a look at the projections here. let's see the projection on trading view. You can see, let's see, upper projection, we have 151.3, 151.6, this is 152.53. This is the 1 minute live chart. Let's look at the daily chart and see what upper projections are there. There's even something even way higher than 100. There's 290 there. I can see that there's exactly 199. So indeed, yes, there are downward projections, no doubt about that. There's downward projection as low as 51.47. Yeah. So, well, as I indicated earlier on, Elon Musk still has $70 billion worth of Tesla stock, even though he's been selling a lot, yeah. Let's see how things pan out, and I'll continue to update you. Thank you very much for watching this video.